Hey, everybody. Welcome back to the Mentor Nation podcast. It's your host, John Abbas here. And today is going to be a solo episode. I do not have a guest on the podcast today, but I'm going to share something that I think is going to add a lot of value to every one of your lives that's listening here today. If you are an entrepreneur or if you're an investor, if you're looking to invest or you want to have success, I'm going to share with you two of the most important lessons that I've ever learned that has made all of the difference in the life of myself and my wife and our family, and just really the wealth that we've built over the last 3 years, and the strategy that we now have that I wish somebody had shared with me in my 20s when I was doing a bunch of dumb shit, making a bunch of mistakes, investing like an idiot, playing the lottery. I just never had a framework and a mindset for thinking about growing wealth in a very short period of time, no matter where I was at, no matter how much I was making currently. And I want to share that with you today. I'm going to share with you the two greatest lessons that I've learned on investing and creating wealth that just changed everything. And so I want to get right into it. I'm excited. If you're not a subscriber to the podcast yet, I would appreciate it if you hit that subscribe button if you see value in the episode. And if something you listen to or hear today adds value to your life, look, just share the episode with a friend, tell somebody, because this advice might help them as well. So let's get right into it. I'm winging it for the most part. I have my notes here on the side, but I just had this on my heart and on my mind. And I felt the need to share it because, having a podcast, talking with lots of people all of the time, people reach out to me. I interview really wealthy, very successful people for a living, and I've learned a lot from them. And so because of that, I have a lot of people asking me just like little different investment strategies, investment advice, where to put money. And so I want to shed some light because I think that there's a lot of bad advice out there. I've listened to it. I've tried some of the things, and what we've discovered that has worked for us over the last 3 years has just been the greatest. It's just been so great. And I want to share that with you guys. So lesson number 1, learn to build a profitable business before becoming an investor. Now, look, I'm not talking about if you're working a full-time job, you love your career, you don't want to be a business owner, you just want to put some money in your 401k or an index fund and let it grow over time. That's not what I'm talking about here today. I'm talking about becoming an investor, investing into assets with your money, and deciding for yourself where you are going to put that money. So the lesson here is learn to build a profitable business before becoming an investor. There's 2 reasons for this. 2 reasons I say that this is a very powerful lesson that made all the difference for us. Number 1 is the skills that you will learn in becoming a business owner will make you a much better investor by 100 times, because there's skills that you learn in running a real business, such as budgeting, looking for opportunities, bootstrapping, hustle, managing people, networking. But most of all, it's the mindset of changing your relationship with money. Before I learned how to be an entrepreneur and how to create a profitable business, I would do things to make money, and I would look at investing like playing the lottery. I was just hoping to get lucky. And here's what I'll tell you. For 15 years of doing that, you do not create wealth that way. When I learned how to run a profitable business, I learned how to look at money as an actual tool, a valuable asset to grow and to multiply, rather than just something to save and to gamble. The second reason I really encourage you to learn how to build a profitable business before becoming an investor is because it's a much faster path to creating enough money to where you can actually go invest and see results. And this is something that a lot of you are not going to want to hear. This is my personal philosophy, but I stand by it. And I have 100% conviction in what I'm going to tell you, because I get asked a million times every month by people all over the world. They say, John, I have $1,000, or where should I put $5,000? Or I'm about to sell my house and I'm going to have $20,000 in profit from that. Where would you invest it? And this is the question that I always ask them, I say, listen, how much excess money do you have left over after every month, after paying all of your bills from the income that you're making right now? And if the answer is less than $3,000 a month extra on top of paying your bills and living expenses, then my answer is invest that money into yourself. Do not become an investor. And that's my personal belief, because I believe until you can get yourself to a point where you're able to invest at least $3,000 per month, then you should not be investing. And there's two reasons why. There's two reasons why I tell people this, and I stand by this. Number one, I don't believe you're going to experience real gains and real growth until you can invest more than just a few $100 here or there and just hope for a lucky break or something you invest in grows by 100x. Does it happen? Yeah, it happens, but it's very rare. And you need to understand that. You can totally, now look, I'm not taking away from investing little bits over time consistently. Yes, you can totally build wealth investing smaller amounts consistently over time. But here's the thing, guys, that is a 30, 40, 50-year game plan. Today, this episode right here, I'm not talking about that. I'm talking about a 5-year game plan. And I'm going to share with you a really powerful strategy. And I'm going to share with you our actual 5-year game plan. We're 3 years into our 5-year game plan, and it's going 50 times better than expected. And I can't wait to share with you, just what's worked for us. So again, I don't recommend that you become an investor until you at least have $3,000 a month. For first reason is to experience the real growth, because you need to invest enough money to really see results. But the second reason, to me, is the most powerful one. And it's the real reason that I say this. It's because, yes, investing something is better than investing nothing. But here's what you have to realize. If you don't have an extra $3,000 a month coming in, your time, your energy, your money is a resource. I believe that those resources are better spent in achieving that rather in a side hustle or freelance work or something else valuable, which we're going to cover in just a minute. I believe your resources are better spent focusing on how you can increase what you're bringing in from your active income to get to yourself to a point where you're making at least $3,000 a month, rather than spending your resources when you're not making an extra $3,000 a month, trying to figure out where to invest it. I truly believe that your resources are much better spent trying to figure that out. And I believe it's better spent that way. Now, guys, listen, for crying out loud, it is easier today than it ever. And I'm not saying it's easy. I'm just saying it is easier today than it has ever been in the history of Earth to build a 6-figure income, or at least build an extra $3,000 a month coming into your home. And I want to give you a few examples of some people in my life that I know personally, friends of mine that are doing this right now, that within 1 year, they built a 6-figure income when they were just working at some dead-end job. And I'm going to share this with you because it's so powerful that you understand these examples, because I want to give you the belief that no matter who you are, what you do, where you work, what your dreams are, that you can go out and create excess by focusing on following a couple simple steps. I have my buddy, Charles Garner. I had him on the podcast actually in a local success series, but man, love the guy to death. A few years ago, he was working at Electronic Express. And if you don't know what that is, it's a retail store. It's like Best Buy. You make barely anything. And he just wanted more for his family. And he didn't want to wait 10, 20, 30 years, moving his way up the corporate ladder, having to start over. He started just doing installation of TVs only, started installing TVs. He already loved electronics. So he started Garner Installation Service. And because he chose something that there was a demand, people move all the time. So they need stuff installed, whether it's curtains, whether it's electronics, whether it's TV, home theater. He started with just TVs and small things, and he grew that very quickly into a 6-figure business. All he did was he started small, posted pictures on Facebook, every installation showing the work that he did. And he does zero marketing whatsoever. And it wasn't any time before word of mouth took off. Why? Because he's doing something where there's a demand for it that he enjoys doing. doing. Second one, old buddy of mine, his name is Kevin Lopez. In his 20s, I also had him on the podcast. The guy was working at Bank of America and was blown away because of how many people he saw coming into the bank, dressed nice, driving nice cars. But you can't lie to a banker, guys. They were coming in and depositing money or withdrawing money. He would see their bank balances, and it made him sick to his stomach at how many people out there looked like they were wealthy, actually had $500 in their bank account. They had no money. And so he decided that he didn't want that to be himself. He's like, okay, what are my strong qualities? Well, he was bilingual. He was in his 20s, working as a bank teller, making $12, $13 an hour. He realized that he was bilingual, and his dad had done a little bit of construction, and he helped his dad. So what did Kevin do? He started a construction company focusing on sheetrock and painting. And because he was bilingual, he was able to find a couple of people. And from there, he started his company, focused all of his energy on doing really high quality work. He looked at what other people were doing that had raving reviews, and he copied them. And his first year in business made $300,000. And I believe this is his second year in business. He's on track to double that, make almost $600,000 in business. Another one. And I'm not going to spend a lot of time here, but I want to give you guys the examples because I believe now more than ever that there's so many things that you can do to create excess income. And that's when it's smart to become an investor. And I'm going to give you real world examples with myself and my wife here in just a minute. But I have a buddy, his name is Mike Medwed. Mike moved here from Chicago, friend of my wife's, knew no one. In his 20s, had a hustle mentality, had no idea what he was going to do, looked at Nashville. It was growing like crazy. He's like, well, you know what? Like all this building going on, people are going to need, have trash removed, and they're going to need construction debris removed and demolition. So he started a company, him, his mom, and his buddy, Music City Removal. Just bought a truck and a dumpster, started there with nothing. And from there, he built $1 million company in less than 4 years. These guys all focused, instead of trying to figure out how to become an investor when they weren't making a lot of money, instead they focused their energy on how can I become a business owner to create the excess money that I need so that I can become a real investor where I can invest real money, not $100 here, $200 here. And I swear on anything that I believe this. I believe that if you, no matter what you do if you find something that A, you enjoy, and B, there is a demand in the market. And fortunately, there's a demand in the market for everything when you're better than most people at that thing. So it could be anything there's demand. I'll do a whole other podcast on a million things that you could do that there's a demand for. But I really believe that if you could just find something that you enjoy doing and you find something that there's a demand in the market, you could focus your energy, you can get good enough for that thing to generate an extra $3,000 per month in a very short period of time. Now, this brings me to lesson number 2. Now, again, recap. Lesson number 1, learn how to be a business owner and generate excess income, at least $3,000 a month before you decide to become an investor. And again, I know that's not what a lot of you want to hear, but I believe this because my wife and I have made a lot of money in investing in the last 2 years. And the only reason why we made a lot of money in investing is because when the opportunity came, we had enough money to take advantage of it and to invest in it. Had we not been in that situation, no matter how great those opportunities were, we just didn't have enough to get a gain that would have made much of a difference. Our time would have been better spent learning how to create $3,000, $4,000, $5,000, $10,000 a month in extra income. Now, the second lesson, the greatest lesson of all, the one that I wish I had known when I was in my 20s, my teens, even in my very early 30s, was to learn to buy and manage assets and never, ever buy liabilities with your hard-earned income. This is a huge lesson, guys. You buy assets, those assets generate cash flow. You use that cash flow if you want to go out and buy liabilities. That way you're able to buy what you want without ever using the money that you had to go out and earn to purchase it. You're using the money that your asset earned. And if anybody ever asked me, John, like if I was ever a guest on a podcast and they say, John, like, what is the secret to wealth creation? And this would be my answer. My 38 years of experience in business and life, this would be the answer. It is your ability to manage an asset and manage leverage. And I'll explain what that means here. And this is gold. This is what changed our lives in under 3 years. When we learn how to buy an asset and make it pay for itself, plus generate some extra cash flow. So think about this. You buy something. Let's say you buy a piece of property. You get a loan on it. You make that asset pay for itself. So it's paying itself off. It's generating a little bit of extra income on top of that. And if you have an asset that is profitable, almost always will it grow in value over time. It will become more valuable. And so that's really powerful. And so at that point, you can use the extra money to buy liabilities. But when you get to that point, you won't want to. You will want to use the excess cash flow to buy more assets. That's how you hit momentum and compounding. So you might be asking yourself, okay, the secret to wealth is buying assets, learning how to make them pay for themselves, and then producing a profit. Well, what are some of the asset classes out there? Well, there's 4 main asset classes that I want to cover today. The first one is real estate. Real estate is an asset class. The second one is businesses. The third one is the stock market. And the fourth one is alternative assets. Alternative assets are things like cryptocurrency, art, gold or silver, lending money to somebody and getting an interest, wine, sports cards. Like these are all what we call alternative investment classes. So real estate, stocks, businesses, and alternative investments. Now, let me give you a real life example. So let me give you a snapshot of my and my wife's actual real life asset portfolio, because I want to be very transparent. My goal here, and I'm talking fast and I'm getting a little bit excited, but my goal here is to add value to you. And then I'm going to give you our 5-year plan, and I'm going to show you where we're at. And I'm going to show you how you can adopt what we're doing, and you can achieve whatever you thought you could in a fraction of the time, or even bigger. It doesn't mean it's the right plan, but it just is a model for what you can achieve in a very short amount of time if you could just focus. So let me give you our personal assets, and this is real life. So the first one is businesses. So for those of you that don't know, my wife and I own a preschool. I own a large preschool just outside of Nashville. We have 150 wonderful kids. I'll get into another episode on how that happened one day, but our first asset class is businesses. I own a preschool and she does real estate. She has a successful, thriving real estate. She's a realtor. And then we also own a med spa. We saw a lot of demand there. And so we bought a med spa at the end of last year that does things like, Botox, facials, fillers, stuff like that. There's a lot of demand, and that demand is only growing. And so we saw opportunity there. So the 3 businesses that we currently own right now that are our main primary are a preschool, real estate, and a med spa. So then you get into our second asset class, which is real estate. So we own an Airbnb in Gulf Shores. We own a short-term rental, 2-bed, 2-bath beachfront condo. We didn't know anything. We didn't have any experience in running short-term rentals. So we wanted the simplest path to do it. So we bought a turnkey Airbnb. We found one that the owners, they were ready to retire. They had it on sale. It had been an Airbnb for 15 years, had raving reviews. It was fully furnished. So we didn't have to think about all the crazy things that we were going to have to buy to furnish it. We bought a turnkey Airbnb. And here's the great thing about it. When we bought it, it pays for itself. So it pays the mortgage. It produces extra income, and the money that we put into it is still there. So if something happened, we could sell it and pull our money back out if we wanted to. And the crazy thing is we just bought it a year ago, and it's already worth thousands and thousands of dollars more than when we bought it. Now, we also own a long-term rental. We own a rental property outside of Nashville. It produces great income. And we also own 7 acres, which we just bought overlooking Kentucky Lake that we plan on building a couple of cabins or tree houses, which we're going to turn into short-term rentals as well. We're big fans of short-term rentals. We've seen it work for ourselves. So, when something works, you just want to do more of it. The third asset class is the stock market. Me and Kat, we both invest heavily into the stock market. I'm a huge fan of the stock market. I'm not a day trader. I'm an investor. Most of my portfolio is in dividend stocks that pay me cash every month or every 3 months. Stocks like AT&T, Verizon, banks, Starbucks. All of these are awesome stocks. They've grown over time, and every 3 months I get dividends. So that's cash flow, more cash flow coming in. And then the fourth asset class for us, alternative investments. I do own quite a bit of cryptocurrency, less than 10% of my portfolio. I'm not a big risk taker, but a little bit less than 10% of my portfolio is in crypto. I own some silver. I own some old coins, and my wife and I are now looking to get into wine investing, just because we enjoy wine and it has outperformed the S&P 500 for the last 30 years. So we are going to do a little bit of wine investing. So that's our asset class, guys. That's our personal assets right now. And so in summary, and then I'm going to share our 5-year plan with you that you can adopt right now, and you can change your life in 5 years or less. I swear to you, you could do it. If you just take what we finally implemented and what we've done in less than 5 years, you can change your life. But here's the summary that I want to share with you. Look at your life like a chair. Okay. And a mentor, a very wealthy mentor taught me this. Each stream of income that you have is a leg underneath that chair. Okay. Your life's a chair. Every stream of income you have is a leg under the chair. Obviously, the more legs that you have under the chair, the more stable that chair will be. Now, here's the problem that most people have. This is the mistake that most people make. They either only focus on one leg their whole lives, or they focus on getting 10 legs right out of the gate. But they're skinny little twig legs. None of them are stable, and you don't have a stable chair. And so here's the advice I have for you. Before you focus on building 4 strong legs, make sure the first leg is strong. Okay. I can't tell you how much it makes me cringe when I hear people preach on social media out in the world. They preach multiple streams of income, when in reality, their reality is they have 15 streams of income and they're barely making anything from any of them. That means lack of focus, not multiple streams of income. Okay. You take your chair, you build a strong leg, and you use that strong leg to go build other legs. Kat's strong leg, my wife, real estate. My strong leg, the preschool. Our other legs that we've built using the excess income from our strong legs is the Gulf Shores rental property, the land, the rental property that we have, the long-term rental, the dividend stocks, the alternative investments. See, those are the other legs that we're building, but we did not start doing that until we had a strong leg, each of us. That has made all of the difference when it comes to investing. Kat's real estate company, they went IPO recently. We had an opportunity to get involved pre-IPO and invest in the stock, but it was, we had to invest quite a bit of money. If we didn't have excess money, we could have never done that, because the minimum was a pretty good chunk of change. So that's why I'm saying, guys, get your strong leg there first. This has allowed us to compound our wealth quickly, but also be smart when looking for opportunities. Now, here's the last point that I want to make before I get into the 5-year plan is retirement. The whole purpose of this episode is to show you not only the 2 greatest lessons that I ever learned, which I've already shared, but really how to create a retirement lifestyle in 5 years. Now, I have to give you my definition, because retirement to me is not an age and it's not a number. I believe that if you change your definition of retirement, it'll change your entire life. Retirement to me is freedom. That's what retirement is. And what I believe in as an entrepreneur is I believe in freedom. Freedom is when you have enough money coming in, completely independent of you having to work. that covers your lifestyle choices. That's freedom. When you have assets that are generating income, not your effort, when you have assets that are producing enough income that your lifestyle choices are covered by that income, you have freedom. And to me, freedom is retirement, because I will never retire. I don't ever see myself getting to a point where I'm not doing anything. I love building things. I love growing. I love contributing. I never want to get to a point where I'm not doing those things, because I know, as has been evident from thousands of studies, that when you stop feeling needed or stop building or creating, that's when you die. Okay. So I never want to retire. But when I changed the definition, when I understood that changing the definition was important, to change my entire life. Because here's what I'll tell you. If retirement is an age, well, what you could accomplish in 5 years might take you 50, because you put retirement as an age. And what if you don't even live that long? So don't ever have retirement as an age. Second thing, retirement is a number. If you have retirement as a number, you might live your life trying to get to that number. And when you get to that number, it might not be the right number. It might not be enough. It might not even be correct when you get there. And that could lead to a lot of disappointment. If retirement is freedom, then you can plan today to get there in a fraction of the time, because again, we live in the greatest economic time in the history of our planet. Now, I want you to hear me now, because nothing sounds worse to me than sacrificing my lifestyle and my best and most energetic years of my life to finally get to a point where I can enjoy it when I'm too old to be able to do. This is why I don't even think about retirement as a number, because I don't ever want to have the mindset that I will enjoy my life when I am 65 years old. Let me work hard now and sacrifice and struggle now, so that way when I'm 65 and I don't have any energy left in my body, then I can finally retire. That is not life. What I'm going to share with you right now is our plan, and it's a 5-year plan. I'm going to give you advice on that plan, and then I'm going to share with you our plan, actually. So 5-year plan, how to retire in 5 years. Now, again, retirement, what do I mean by that? Having enough assets, generating enough income that you can afford your lifestyle choices. That's the 5-year retirement plan. So how do you do it? How do you do it no matter where you are right now? Well, let's start with year one. Year one, the first half of year one, find something that you can do or learn to do that can bring in a strong amount of earned income. Spend the first 6 months learning, practicing, finding mentors, investing in yourself, doing that thing for cheap or free to get the experience, to get better. The key is to focus all of your spare energy on that thing. I promise you, in 6 months, you can be proficient enough to be better than 90% of people out there at that thing. And when you are better than most people, 90% of people at anything that is something that's valuable, people will pay you for it. I promise you this, when I lost my restaurant, I lost everything. I had to get a job doing something that I hated worse than anything in the world. I had to get a job teaching ballroom dancing. Worst job I've ever had in my life. I literally found the job on Craigslist, was so sick to my stomach that I was like, I will start business, any business. I got on Google, looked up cheapest businesses to start, or businesses to start for under $100. I found that window cleaning was a business that you could start. I literally bought a $50 window cleaning kit. I bought a book on how to start a window cleaning business, got some business cards, read how much to charge, went into a neighborhood, knocked on the door, and knowing nothing, I mean, windows, it's not hard to learn how to clean windows. I had a lady that was like, absolutely. I stayed in that entire neighborhood. She referred me to all the neighbors. I was doing 4 houses a week. Each house, it was in a nice neighborhood. Each house took me the whole day. I was charging $250 per house. And I was doing 4 houses a week. I was making $1,000 a week, $4,000 a month doing that. And this was years ago. This is when the economy was in the tank, but that got me out of that stupid job. And I'm telling you guys, you could do anything, but you spend the first half of year one finding something that you can do or learn to do. and you do whatever it takes to get good at it. You focus on it. You find mentors, you network, you learn, apply, do. Now, second half of year one, you got to take massive action. Look, man, you got to set a goal for your side hustle. You got to focus all of your energy on getting it to a point where it is making you an extra $3,000 a month minimum or more. You could do way more than that. I'm just setting a minimum here. While doing this, this is still year one. This is what we did. While making the excess income from your strong leg, you don't start investing yet. You stabilize yourself. If you don't have great credit, you repair your freaking credit. You're going to need it. Okay. You will need it. I don't care. Unless you're paying for everything cash and you don't ever plan to use leverage, you're going to need a pretty good credit score, no matter what you're doing. Okay. So use the second half of the first year to stabilize yourself, pay off your debts, build your credit up, get your point to where you can start utilizing leverage and purchasing assets in year two. So that's what I would do year one. I'd spend the first 6 months identifying the side hustle, doing whatever it took to get good at it. The second half to take massive action in every area, make excess money, and stabilize your life. Second half of the year. Year number two. Find an asset class that you enjoy while still focusing on your business or your side hustle that's producing the extra money. But you find a side hustle that you would enjoy. If it's real estate, figure out what type. Long-term rental, short-term rental, commercial. If it's stocks, what type, whatever it is, you find an asset class that you enjoy. Or even if it's just your business, like, look, your business, your side hustle that you started is an asset. So you might want to just scale that. That's okay too. But the goal here is to buy your first asset in year two. You purchase your first asset and you learn how to manage it properly so that it pays for itself, generates a profit, and will grow in value over time. If you manage an asset well, I promise you, it will go up in value over time. And then here's the cool thing. Year 3, year 4, year 5, it's simple. It's just repeat. Year 3, you buy more assets, become more efficient, scale what's working, eliminate what's not working. Year 4, buy more assets, repeat. By year 5, buy more assets, repeat. Guys, this is a plan that could literally change your life. And I'm not going to go into a lot of details here, but I'm going to tell you a little bit about our story, and I'm going to be open. I'm going to be honest, and I'm going to share with you because I've had many, many years of my life where I've made great money, and I've had some deep, dark years where everything seemed like it was falling apart and I didn't know what I was going to do. But I got divorced in 2013 and I started all over again. I was in network marketing. When I went through a divorce, I started network marketing in 2009 and actually ended up doing pretty well with it. But when I went through a divorce in 2013, I lost all passion for the career that I was in for many reasons. I was just in a dark place. And the sad thing was, I continued that career for 5 years after I lost passion for it, mostly hating it. And finally, in 2018, this is not that long ago, guys. In 2018, I decided to completely change paths. I'd had enough. I couldn't continue any longer. I decided to completely change paths for the opportunity. And so our year one, Kat and I, was in 2018. And so in 2018, I bought a daycare, saw an opportunity through mentorship, and I bought a daycare, and my wife had got into real estate. We had a big transition in our lives. Like, I left network marketing after 10 years for something completely different that I had zero experience in. And my wife, when she got pregnant, she left finance. She was in finance. She was a financial advisor for a big company in Chicago. She picked up, and for me, she moved her entire life to Nashville where she knew nobody. And she got involved in real estate. So 2018, guys, were our year one. She left Chicago to be with to be with me in Nashville. So she got into real estate. It didn't cost her hardly anything, a few $100 to get her real estate license. I bought a daycare. I borrowed 100% of the money that I needed to buy that day. I borrowed all of it. I didn't put $1 of my own money into that daycare. Okay. So it was scary. It was scary. We had a daughter. We were both in completely new careers, starting from zero, guys, zero. She had burned through almost all of her savings from finance, just figuring out what to do, making the transition here in Nashville. And I wasn't much better off, recovering from a divorce and just not in a place where I was happy doing what I was doing. So I produced minimal. And so we were starting from zero, but we worked our asses off in 2018. We figured out how to be successful, grow those strong legs, our first leg under the chair. We focused on our core businesses, how to be the best, how to work hard. We invested in nothing. We lived frugally in an apartment and saved money. Now, we started making pretty good money pretty quick because we hustled. We worked hard. We could have bought a house if we wanted to, but we didn't. We lived in an apartment until recently. We literally lived in an apartment until just a few months ago. We've been building this house for a while, so we're living in our dream home now, but we live frugally in an apartment. We paid off all of our debt. We got our credit scores to, high 700s. And then in year one, we started discussing what we wanted our first investment to be. So that was year one. We focused on that strong leg. Year two, our core businesses were doing really well. So we started to maximize them even more to produce even more money. And in year two, we bought 2 properties. And I started investing heavily in the stock market. I had the money to do it. Our core businesses were doing well. We bought our Airbnb. We bought a long-term rental property. I started investing heavily in the stock market. Kat started investing heavily in the stock market. Our long-term rental property makes us $1,350 a month. It's completely paid off. We paid it off very, very, very quickly. Our Airbnb in Gulf Shores, the mortgage on that is $1,400 a month. The HOA is $500 a month, but it makes $4,500 per month. So it's definitely profitable. I focused all of my stock investing on strong stocks that pay a great quarterly dividend while I learn more. And by the end of year two, because of growth and the fact that I was able to invest pretty large sums of money in the stock market after it tanked when COVID hit, I got my dividends to about $1,500 per month. And I made over $100,000 in profit in the stock market. And all this happened in year two, guys. Like, it was a lot. It was crazy. It was like momentum. We bought 2 properties, invested hundreds of thousands of dollars in the stock market, made a ton of money in the stock. And that would have never happened if I didn't focus my year one on getting my strong leg right. Because I promise you, if I didn't do that, if I didn't focus, live frugally, not try to follow the grass is greener, invest in a million things. If I didn't do that, I promise you, to even today, I would still be throwing $300 into this, $400 into that, hoping for some shit to take off and something to work. Now we're very purposeful about how we invest, and we're able to take bigger and bigger risks. Now, year 3, with a few assets doing really well, our core business is doing well. We stayed the course, but we took some bigger risks. Instead of only investing in dividend stocks, I started investing 10% into alternative assets such as cryptocurrency. I started investing more into riskier growth stocks like EV stocks. EV is a long-term play, but I think that has the greatest potential to double, triple, quadruple over the next few years. And it's okay if there's bumps along the road. And if I lose money temporarily, I'm investing. I'm not day trading. Okay. But we're taking year 3, taking bigger risks. We also, in year 3, we bought a med spa. It was a business. We also purchased 7 acres of land with a gorgeous view to build 2 cabins on that we're going to use as short-term rentals. We're also, right now we're in the midst of selling our long-term rental, and we're going to funnel that money into either a triplex or even another Airbnb, because we're big fans. Both the stocks and our cryptocurrency investments have grown so much that it's sped up our 5-year plan quite a bit, actually. We're at a point now, and again, I'm not saying this to brag. I'm just, we're at a point now where we could hit retirement. And again, I don't mean we're not multi-millionaires. Again, my definition of retirement is freedom, guys. It's freedom. Now, my definition of where I want to be for retirement, we're not there yet, nowhere near there. So we're staying the course and we're continuing. But to cover our living expenses, to cover the expenses we need to live the lifestyle that we have today, yeah, we could retire right now. We could retire right now, and our assets are producing enough that we could do that. But again, that's not our goal. So we're going to continue and we're going to stay the course. But see, here's the thing that I want to share with you. It's not luck. It's preparation that met opportunity. And when good timing hits, we were ready. And if you do that, if you focus, I promise you, everything in the world operates on cycles. Stock market, real estate market, everything. Cycles, up, down, up, down. When you hit a down point, you need to be ready, because if you're ready and you have the money and you have the funds because you focused on building that strong leg, that's when you get lucky. That's when timing meets preparation and you build wealth very, very quickly. Year 4 for us, this is projected. This is this year. Has not happened yet. We're going to study which of our assets are producing the most return, and we're going to we'll double down on those while scaling down the others, while, just with the exception of some diversification. Our goal is to hit momentum, and momentum to me is a natural result of time and growth. Whereas it was crazy that we bought one Airbnb in a year, when you hit momentum, our goal this year is to get 3 to 4. We want 3 or 4 this year. That's what happens when you hit momentum. Because again, when your assets are doing well and you're producing income, you're basically building a silent reputation, right? You're showing the world that you have what it takes to take something and make it more valuable, take something and make it pay for itself. And when you're able to do that, when you have a great credit score, when you have assets that are producing cash flow, you look better to everybody, to lenders, to banks. And when you look more attractive, they trust you with more money. And that's when you're able to take advantage of what I shared with you earlier. The secret to wealth is learning how to manage leverage, but you can't have leverage if you don't have a reputation. And so as you hit momentum and you start proving yourself, you become more attractive to everybody, and you're able to raise money. You're able to borrow more. You're able to buy more assets. You're able to pay them back and have those assets generate extra income for you. Guys, I'm telling you, this is such a powerful lesson. And I know that I was all over the place with this podcast, but I wanted to share this with you because I believe that getting to where you want to go is a lot simpler if you could just focus and you have a plan and you have some sort of a structure. It's just important that you understand that. Now, I do want to share with you a disclaimer. And again, year 5 for us. So year 4 is scaling, and year 5 for us is the year of self-care. It's the year of eliminating everything on our plate that doesn't serve our happiness. The goal here is for us to have it, like for us personally, doesn't mean it has to be your plan, but for Kat and I, our goal is to have $50,000 per month in cash flow coming in from our assets. And we're pretty clear on how we're going to get there. This number for me represents $15,000 a month for living expenses, travel, lifestyle, $15,000 a month to continue reinvesting, and $20,000 a month for taxes, long-term savings, charity, or just a war chest in case we decide to make like a really big move. So that's our 5-year plan. We're on track. Our goal is by the end of year 5 to have $50,000 a month coming in from passive income, eliminate everything on our plate that does not make us happy. Happiness is far more valuable than any dollar amount. And it's just, that's just it for us. Year 5 for us is self-care. We've done the work that we need to do so that we only now do things that bring us joy and that make a difference moving forward. Now, again, this is my plan. This does not mean it's the correct plan, or doesn't mean that it's the plan for you. If wealth create, and now again, if the reason I say that is because if wealth creation was our sole focus, we'd probably focus more and diversify less. I probably wouldn't have all these different asset classes, but Kat and I, we're just a little different. We like trying new things. We like testing things. It's an adventure for us, to just experience new things. But the big point is that I believe with focus and understanding assets and having a plan for acquiring several of them over the next 5 years, that you can absolutely achieve the lifestyle that you want to leave. Doesn't mean it's perfect. It doesn't mean it couldn't take longer or It might happen even faster. But the point I'm trying to make here is lifestyle isn't luck. It's a plan. It's a strategy. I've learned that in my late 30s. I wish I'd learned that in my early 20s. I just wish I'd understood this, because I would have eliminated so many things that didn't serve my future. I would have focused more. And I look back and I'm like, oh, I could have done this when I was 21 years old, but that's okay. That's life, right? Life is about learning things when it's the right time to learn them. And sometimes you need to go through things in order to have the right perspective and to be in the right mindset to be able to understand the advice that you're receiving. And so but it would have prevented me from going down a lot of useless rabbit holes. So having said all that, guys, listen, I hope you enjoyed this episode. And just remember, I believe in you. If you ever have questions on something that I said or something that I covered a lot in a very short period of time, feel free to reach out. Follow me on Instagram at Mentor Nation Podcast. You can reach out to me there. I'll always respond. My goal is to help. That's why I started the Mentor Nation Podcast, is to help people. If anything you got out of this episode was valuable, tell somebody, share it with a friend, let somebody know. I appreciate all of your support over the last year with this podcast. And I'll be back next week with an actual guest, giving you some advice and strategies and not just me. So thank you guys so much for tuning in, and have a fantastic week.